Hello everyone, welcome to the ichimokucharts.com daily analysis for the SP 500 for Wednesday, May the 5th, 2010. Well, a continuation of the trend in the first time frame today, and we have a candle with a lower high and a lower low. On the previous day we had a breakout down below the neckline of the head and shoulders pattern that formed over the previous month or so. And here we have the prior trend leading into the consolidation area, and always with any patterns in TA we need a decent prior trend leading into it. Here we have the left shoulder and the peak of that left shoulder, the head, the peak of the head, and the right shoulder with the peak here. We then draw a line between the two shoulders, and that's called the neckline, and we enter the trade to the downside on a breakout down below the neckline. That breakout must be a close down below that neckline. We have had that, and it's been quite a bearish close down below. Now once we have that breakout, we can actually project a target down below where the market broke out from, and we measure the distance from the top of the head down to the neckline and project that from the position where the market broke out from the neckline, and that gives us a target of roughly around 1140. So if the market is going to continue selling off, then the market will sell off potentially another 25 points to meet that target. Now, some of the things that can alter where we have that target and how confident we can be of that target are potential support areas down below where the market broke out from. And as we've mentioned quite a few times before, we have some very, very strong areas of support down below here. From where the market broke out. And the first was the 1169 area. And we can see on the previous candle that there was a very small shadow on the bottom, and buying came in as the market attempted to trade down through there. So that area held on the previous day as an area of support. Today's trading, though, the market then found support at around this 1163 area, and we can see the long shadow on the bottom where the market where the buyers came into the market and bought the market back up to close at just roughly around the midpoint level. So that's another area of potential support. Also, we have potential support at the top of the cloud here at 1150, and that was a previous area of strong resistance. So we can see that there is potential for the market to change, or for the previous resistance to change roles and become support. And anywhere down through the cloud offers very strong support as well, and our target is within that cloud. So if the market does trade down to that level, then there is a very strong chance that that area will hold within the cloud. Now, as I've said today, the market does continue this trend to the downside, and it has, on the previous day, traded down through that level of support, found support at the 1163, so that area needs to be tested again for the potential for the market to trade down around to the 1150. The only worrying thing about this is that the market is now, on the continuation of the downtrend and the breakout happened on an indecisive spinning top type candle. And the spinning top candle is one where we have a very small body with a larger shadow on the top and the bottom, and that denotes indecision in this market. The very small body means that whatever side made the better progress on the day between the open and the close only made a very small amount. And that's not what we'd like to see in a downtrend. We actually want to see quite a bit of significant bearishness with regard to the body of the candle, and we haven't seen that. The good thing for the bears is that candle body is red at least. So at least the bears did make a smaller amount of or a more decent amount of bearish progress than the bulls made. In bullish progress, they actually made none. The worrying thing about this candle also is that we have the shadow on top, and that represents downside price rejection, and that coincides with the market attempting to trade back up above this 1169 region, and roughly the influence of the neckline here and the 1179 area of resistance. So there was selling coming in, but also on the bottom the support coming in. So a large battle between the bulls and the bears going on throughout this trading day. Not really the sort of day that you want to see upon a breakout from a fairly large head and shoulders pattern, and for a continuation of a downtrend. So the market is very indecisive at the moment. Now what we would need for any change of trend, and there is potential for that to happen because of the indecisiveness in the market, would be for the market to make a higher high and a higher low. So the high of the current candle becomes very important. Now, if the market does take out the high of the current candle, we do need to remember that breakouts to the from necklines in head and shoulders patterns can quite often retrace back up towards the neckline. So it looks as though there is a possibility that the market will do this. And what happens is that there is potential for them to find resistance up around that neckline and then sell off once again. So if the market does appreciate, we do need to watch this area around 1179 and read the short-term dynamics of the next trading day's candle for any potential for the bears to come back in and for the market to come back with a first time frame downtrend and to sell off and approach the target down around here. But we do need to wait and see how trading develops tomorrow. In Ichimoku chart terms, we are trading up above the cloud or the Kumo, so overall the market retains that overall positive bias, although we are beginning to trade closer to the cloud, which will offer very strong support. The market is trading down below the Tenkan-sen and Kijun-sen, which means that in the short-term and medium-term time frames, the market is very negative, and both of those indicators are pointing down fairly sharply, reflecting the very strong downside momentum that was in this market in terms of the highs and lows and the trend to the downside. Now, if the market does rally again up past through this 1179 region and the neckline, there is potential resistance for the market around the Kijun-sen and Tenkan-sen, which are both at 1188. So there is potential for that. But overall, the market is negative in the short-term and medium-term time frames. There is a chance that it will interact with some support down around the cloud, but still a chance that the market will retrace back towards the neckline.